The trading in the Dow was slightly higher today, which doesn't really change any of the trend, but what it does do is notice the two previous candles. These are what you call two dark crows, usually indicating a sell signal. Two dark crows consists of a dark candle opening here, closing here. The next day they gap it up and sell it off again. That's usually a sell signal. However, today's positive trading gave us other insights that the sell signal didn't confirm, number one. Number two, the 3T line, which is a faster indicator than the T line, they're still trading above the 3T line, let alone the T line. Again, our very simple rule is as long as the indexes are not showing a sell signal and a close below the T line, we're in an uptrend. As long as the candlestick signals are still trading above the 3T line, that's more evidence there hasn't been any change of investor sentiment. The NASDAQ doing similar trading. It opened positive and traded positive, also staying above the 3T line. Notice how the T line has been acting as an upward trend support. The 7,000 mark was touched the other day. The 25,000 mark in the Dow is getting reasonably close. Currently, there is no evidence that the sellers are taking control. The trend is still in progress. The T line becomes a very important factor when analyzing or positioning a trade. As we can see in Skechers, when we saw the buy signal, the bullish engulfing signal, the close above the T line, the break of this downward trend channel, how long do we hold this? Until you see a sell signal and a close below the T line. There was one day right here where we could say, oh, it closed below the T line. It was time to get out. But what was our pre-analysis of this trade, or the analysis of the trade prior to that day? That the T line was acting as a logical support. So what's the criteria? Very simply, if it opened lower the next day, you close out the position. It needed to open higher and trade higher for the day. So it's still trading the steady eddy above the T line. Our recommendation a few weeks ago on RF was based upon a breakout through this level, and then notice what it's done ever since then, stayed above the T line. This is what we call a 45-degree. Your big breakout move, and then it moves in a consistent 45-degree level as long as it stays above the T line. It also allows for very high probability exact trade setups. Our recommendation on DRNA today was based upon a positive open after a Morningstar signal off the 50-day moving average, and the third day of the Morningstar signal closed above the T line, creating two factors. One was creating a bullish signal. Two, it was telling us this downtrend was broken. And three, it was closing above the T line. What's that tell us about investor sentiment? That there's been a change of investor sentiment right here on a major support level. The logic behind candlestick analysis is very simple. The signals have been identified over the last few hundred years by the Japanese rice traders. All we're doing is learning how to take advantage of that information that the Japanese rice traders have provided for us as a reversal, and then seeing what other confirming indicators increase the probability that that reversal has occurred. That'll be it. We'll see you in the chat rooms.